Welcome to yet another interesting part of this training. In this training, I'm going to discuss the powerful candlestick languages. Do you know the power of language? If you know the power of language, you will never play with this section of this video. Your ability to understand the language every candlestick speaks will translate to the amount of money you will make in the trading world. In this case, I'm going to discuss downward movement turns upward language. What I mean here is that in a downward trend, what languages or what patterns will the chart speak that tells you that now this market is upward or is about to move upward? One of the languages or one of the signs is called hammer. What is hammer? It's a small body with long lower wick, indicating that sellers tried to push the price down, but buyers push it back upward, signaling a potential reversal. Remember, Forex is all about buying and selling, sellers and buyers testing the strength based on understanding of the market. Let's look at the diagrammatic presentation of what a hammer looks like. This is a bullish hammer. That means it is signifying buyers coming into the market. Now let's look at a chart. Look at this chart. This is the trend. The market is coming down, and at this particular point, a hammer occurs. Then after the hammer occurs, you can watch the market keeps moving. There is an entry level. Once the hammer occurs, it is not an automatic ticket that the market will go up. No, you wait for confirmation. You wait to understand that this hammer, does it hold water? That is when you will trade. All this, or how to trade, these indicators or these languages, specific one I trade is found in my master class. Let me tell you why. There are hundreds of patterns. So as a trader, you must choose one or two that will work for you, or three or five, as the case may be. Remember, it's a strategy. So, and the strategy must be dynamic. So it must not be fixed. No, you must change. Forex is a game. You must be changing as the game changes, using various strategies or the languages you understand. The next language that it speaks in a downward is called inverted hammer. This is similar to the hammer, but with a long upper wick. This pattern shows that buyers tried to push the price up, the sellers brought it back down. However, buyers gain control. This is exactly how it is. In these markets, you can see how it works. In a downtrend, this is an inverted hammer, right? And after the confirmation, you see the market continue going. Please take note of these things. They are languages, and we have the confirmation points to confirm that it has hold and before you trade. Bullish engulfing pattern. Hammer and inverted hammer is or a single candlestick pattern formation, but this is double candlestick formation. That is the bullish engulfing pattern. A two candle pattern where a small bearish candle is followed by a large bullish candle, completely engulfing the previous one. It indicates strong buying pressure. This is exactly what we are talking about here. This is a bearish candle, but the bullish now engulf everything about this. Let's look at it here. You can see as the market is coming down, at this particular point, the bullish now engulf everything about this, and the market continue going up. That is a very strong language. I don't joke with this language, bullish engulfing pattern. Another strong pattern is piercing line. It's a two candlestick pattern also, and it is a bearish candle which is followed by a bullish candle that closes the midpoint of the first candle, suggesting a shift in buying momentum. Now, why is it called piercing? Let's look at why it's called piercing. The candlestick, the price opens here. It opens, this is the previous candlestick. Now, the second one opened below and pierce. You see where it derives its name to this to the second candlestick let's look at it here. The market is coming down. Now, this is where this candlestick opened here and closed here. But now, it opened here and pierced into this pattern. I hope it's clear. So, and after this formation, you see the market continue moving up. This is a strong pattern, language that you must learn, you must understand. How do you trade all these patterns? In the master class, you will understand this. Morning star. Now, when we're talking of morning star, remember hammer and inverted is single candlestick formation, bullish engulfing pattern and piercing piercing pattern are double candle. Now we are talking of 3 candle patterns with a large bearish candle, a small indecisive candle, and a large bullish candle. It shows a transition from selling pressure to buying pressure. This is exactly what we are talking about. This is bullish, bearish comes down, and this is an indecisive candlestick, then the bullish come up. Let's see how it works here. You can see this is called the morning star. Comes evening and the morning star gives rise to the next day. That is exactly what it is. 3 white candle soldiers. A strong bullish reversal pattern made up of 3 consecutive bullish candles with progressive higher closes, indicating sustained buying momentum. This is what we are saying here. This is it. Now, a bullish engulfing pattern has formed here, right? Another one opened. Another one opened. Now, this, what I want you to understand, that this opening, it must close above. It must close above. There are 3, but each one is higher. That is why it is called a candlestick. That's why it's called 3 white soldiers. Once you see this, you know that the market has sustained its bullish movement. However, I don't trade this. Which one do I trade? How do I trade it? This you will find in the master class. Doji in a downward movement. A candle with almost the same open and close price, indicating indecision. When it appears after a downtrend, it suggests a possible reversal, especially when combined with other signals. So when you see these things, they are not fixed that it must occur, but you have to wait for other signals. These are things you learn. This is exactly what we call doji. The opening and the close price of that currency pair is almost at the same. It opened at that particular price, go up and down, still come and close on that price. This is exactly what we call doji. This is from Investopedia. So this is a very useful language you must learn as a forex trader. Conclusion: without mindset word, your wealth in forex trading strategy depends on your deep understanding of these powerful candlestick languages. In the next video, we'll discuss the up movement turn downward languages. Your ability to understand the language of the chart. In fact, I don't trade with any indicator. All I trade is the chart. Once I see the chart, it has spoken to me. I've understood. I know what to do. So that is what I expect you to learn in my master class. So in the next video, we'll look at opposite. When I mean opposite, when the market is up, what are the indicators that will show that this market is about coming down? Thank you for watching. As you progress as a beginner, in a very short while, you will definitely become a money-making machine. Thank you.